Good day, great hope learners, and welcome to today's accounting lesson. My name is Mr. Simbi, and this lesson is brought to you by the Gauteng Department of Education in collaboration with Saibono Discovery Center. Today is a very important day, as tomorrow we get to sit down for our final paper 2. I know you've done well in your paper 1 already, and tomorrow is greatly important. So today we're going to cover a number of aspects. There's so much areas, so much topics to cover in paper 2. So I will not cover all the topics, but I'll cover some of the topics, and then I will remind you of some of the things that you need to look into. Once again, welcome to today's class. Here are my objectives for today's class. I will talk on the structure of paper 2. I'll also touch on the bank reconciliation. I will do the creditors reconciliation, and then I will also touch cost accounting. Inventory valuation together with budgets will be done in today's class. Whatever I will not have touched, I will still point you to some of those topics so that you can prepare in your own space. The structure of paper 2 is as follows. There are topics that would normally come, and these have been covered in several of the past examinations. That is your cost accounting, your inventory valuation, and your budgets. These 3 topics are covered in almost all the examinations that we've seen so far. All right, so these 3 are very important as we're preparing. Please ensure that you prepare on these topics. And then your reconciliations, your VAT, your tangible assets are also of great importance. All right, so I'm going to touch on some of these today as we continue with today's class. To begin with, we are going to jump into the first activity. Now, it is very important that you have somewhere to write. You need pen, paper, you need a calculator as well, because I want to engage with you in today's class. So I need you to have somewhere to write. Make sure you get somewhere to write. Make sure you have something to use, something to write with. That is the pen or the pencil. And you also need a calculator, because we're going to do some interesting calculations today. All right, so to begin with, we're going to start with a reconciliation question. That is a bank reconciliation. Remember, we prepare everything so that if the examiner brings any of the things, we would have covered all the angles that are necessary. So the first aspect in today's class is your BRS, that is your bank reconciliation statement. And this is coming from the June 2023 paper. All right, so if you have this paper close to you, remember, we are going to be engaging together. So I need you to be writing stuff as I will be writing here as well. Okay. The question reads, Violet stores. The information was extracted from the records of the business for April 2023. Violet uses the official bank statement, which is available on the 25th of each month, to complete the monthly reconciliation process. She also uses her EFT transaction records numbered to complete the cash payments journal. Required. So remember, within the first 10 minutes of the exam, that is your reading time, you need to read your question paper together with the answer book. So you read these 2 at the same time so that it assists you in understanding what the examiner is testing you on and what you are supposed to be writing in the answer book. All right, so in 1.2.1, it reads, update the totals for the cash receipts journal and the cash payments journal for April 2023. So here we're going to get an update of the journals, and then we'll calculate the correct bank account balance. So these are 2 things that move hand in hand. So as we are doing it, we're just going to be completing it step by step. And then the third part of the question is that we prepare the bank reconciliation statement. I would want to advise you that when you answer this question, answer all these at the same time, if possible. In other words, you pick the adjustments or the omitted information as you go. I'm going to show you how to do that. Okay, if you're ready, let's see. Information. This is an extract from the bank reconciliation statement for the 31st of March then we are told here that there is a favorable balance as per the bank account, which is 49,720. Now, my question is, what if the examiner does not give you this amount? Are you able to get this? In the event that the examiner does not give you this 49,720, are you able to get it? You should be able to get it. How do you get it? Remember, this is a favorable balance. So you take your favorable balance, which is 12.2. Then you add the deposits, that is those two deposits. Then you subtract the EFTs. That is how you come to this 49,720. In the event that the examiner does not give you the balance, that is the 49,720. If this one was unfavorable and still you're calculating this balance, so this one was going to be a minus, and then you would do again as I had done earlier on. But in this question, the information is given. So we have the balance as per bank account of 49,720. The information that we are given reads, the outstanding deposit on 18 March appeared on the April 2023 bank statement. So we know that this is the March BRS, and here we have an outstanding deposit which has now appeared on the April bank statement. In this case, what we do is we come, this is the deposit. Now we are told that it has appeared on the April bank statement. Once an amount that was in the previous month's BRS now appears on the bank statement, it simply means we have found it. So in essence, we don't record it anyway, except if there is an error. But like this deposit of 23,600, we simply come here and we tick it like that. Then there's nothing else that we're going to do. Okay, so you do nothing with this first one. Let's read the second one. It reads, the deposit on 28 March 2023 appeared as 22,000. An investigation revealed that the cashier has disappeared with the outstanding amount. It was decided to write off the outstanding amount. Okay, so what we know here is that there's a deposit on the 28th of March, and that deposit is appearing now as 22,200. Remember, this deposit was recorded as 37,200 over here. Now, it has appeared on the bank statement. However, it has not appeared as 22,200. Is 37.2. It has appeared as 22,200. So what we now do is we understand why it was in the BRS. It was in the BRS because we had recorded it in the CPJ. We had recorded it in the CPJ and it had not appeared on the bank statement. Hence, we put it on the BRS. Now, we are then being told it has now appeared. However, it has appeared as 22,200. So what we know is that in the CPJ, we have recorded 37,200. However, the amount must be 22,200 because the other amount must be written off. So we will now say that 37,200, which we had recorded in our CPJ, minus the amount that now appears in the bank statement. And then this will give us a difference of 15,000. What this means is our CPJ has 15,000 that is not supposed to be there. Our CRJ, it's a deposit. It's a deposit. It's a deposit. So it was in the CRJ. It's a deposit. So that means in the CRJ, there's a deposit of 37.2. In the CRJ, there's a deposit of 37.2, which is not supposed to be there. And the amount is 15,000. Okay, so I'm going to say it again one more time. The amount was recorded initially in the CRJ because it is a deposit. So it was recorded in the CRJ as 37,200. However, when the amount has now appeared on the bank statement, it appeared as 22,200. That means in the CRJ, we have more. That is 15,000. Once your CRJ is more, You correct it by putting the difference in the CPJ. So I'm going to come here and I'm going to put my 15,000 in the CPJ. I'm going to say this transaction one more time. This deposit, it's a deposit, so it was initially recorded in the CRJ. In the CRJ, we had 37,200, and then it has now appeared as 22,200. So it simply means we had recorded 15,000 more in the CRJ. The difference, therefore, is 15,000, as I said, which you now record in the CPJ. Okay, I'm going to move on to the next one, which is this one now. And it reads, both the EFTs were on the April statement. Okay, so we're talking about these two EFTs. They were on the April statement, but EFT 768, which is this one, appeared with the correct amount of 4580. Okay, so the moment it is an EFT, I know these were recorded initially in the cash payments journal. So these were recorded in the cash payments journal. So we had recorded in the cash payments journal 5,480, but we are told now it has appeared with the correct amount of 4,580. So we get the difference between the 5,480 and the 4,580. And the difference between these two amounts is 900. So what we know is that within the CPJ, we recorded 5,480, which is more than what is supposed to have been recorded, which is 4,580. So we take out the difference. Once there is more in the CPJ, we correct it by recording in the opposite journal, which is the CRJ. So we come to our CRJ here, and we're going to record our 900 over there. All right, so I'm going to move on to the next aspect, which is coming. So let's go on to the next one. Okay, so what we also understand here is once we have an amount that is from the previous month's BRS, this will help us in the second part of the question, which is the preparation or the calculation of the correct bank account balance. All right, so there are several ways in which one can do this. I'm just going to open a bank account, and then I'm going to take the amount that we have here. Here we know that we have a favorable balance as per bank account, which is 49,720. Once it is a favorable balance, that means it comes to the debit side. So this is the debit side, and this is the credit side. So if it's a favorable balance, that means it's your balance brought down here, which is your 49,720. Remember, you have several ways of doing this. Others would have just done the line calculation, whereby you come into your box where you are doing your calculations, and then you start with your 49,720. Several ways of doing this. I'm just going to stick to one way so that it may make sense at the end of the day. All right. If it was an unfavorable balance, therefore you're going to bring it onto the credit side if it was unfavorable. Okay, let's move on to the next one. On the next one, what we are given is information on the April 2023 bank statement. This is information on the April 2023 bank statement. And they say none of these items appeared in the cash journals. So none of these items appeared in the cash journals. Okay, let's see. There is additional information, and what we're going to have is our cash journals. Let's begin with the first one. It reads, debit order, Brylet Municipality, 2,880. So if you have a debit order, we are told here on the additional information that the debit order was for water and electricity. This debit order was for water and electricity. So where would we record this? In the CRJ or in the CPJ? Thank you. So we'll record this in the CPJ. So I'm going to come to my CPJ, and I'm going to have my 2,880. Okay, I'm going to go on to the next one. Number 2, cash handling fees, 220. But if I come further down here, I see that I have EFT transaction fees here. All right. The one is 360. I have another one 360. Okay. If I read this bullet, it says EFT transaction fees were duplicated on the bank statement in error. Okay. So that means on the bank statement, they recorded them twice, but we should be having only one, that is the 360. What it means is when I'm recording in my journals, I will take only one of these ones. Okay. And if there is an error, we know that errors are corrected in the BRS. So we're going to go and correct the error that is on the bank statement in the BRS. However, we should record our EFT transaction fees. Remember, they form part of the bank charges. So that means I'm going to come now to my CPJ. Remember CPJ because we are having bank charges here. And now I'm going to quickly say, I'm just going to open a bracket here. I'm going to say I have 220 and then I'm going to add my 360. It's my 220 plus my 360. If you have a calculator's close, how much do you get? 220 plus 360. How much is that? 580. So I have my 580 there, which is the bank charges. I'm moving on to the third one. Deposit Y Marigold, 8,400. Okay, so we have a deposit from Y Marigold for 8,400. We are told here, Y Marigold, the tenant, deposited the monthly rent. So this is money that was deposited into our account. All right, so where do we record this? Remember, it is not appearing in the cash journals. If we receive money, in which journal do we record? We record it in the CRJ. So we come here, it's going to be 8,400. 8,400. The money that we have received. Okay, I'm going to move on to the next one. Let's go to the next one. Deposit Bentley microloans, 65,000. All right, let's see. There is a bullet for it here. The deposit from Bentley microloans did not relate to the business. I've seen transactions like this in several papers whereby there's a deposit in our account which does not have anything to do with us as a business. Then they say the bank was informed of this error. It is an error. Once there is an error on the bank statement, we're going to correct this in the BRS. So we're going to come to the BRS. So this one here is going to come to the BRS. We're going to do that in a very short while. The next one then says there is cash withdrawal 740. Then the bullet then reads the cash withdrawal of 740 was for fuel for the owner's vehicle. So if that is a withdrawal for the owner's personal vehicle, remember that will go now to the what? To the cash payments journal, because this is a cash withdrawal. So we're going to come to the cash payments journal. And how much is that? This is 740. So I'll come here, then I'll record my 740. The next one is that we're having investment matured 18,300. Okay, I'm going to touch on that one as we are going. All right, investment matured, that is your 18,300. So if we are going to go, we are going to touch on this one, investment matured. Where do we record it? We record it in the CRJ. So we come here, our investment is matured. So we come here, then we have our 18,300. That is the investment that has matured. All right. So far, that is what we are having. That is our investment that has matured. All right. So what we have done so far is we have recorded amounts that appeared in the bank statement, but did not appear in the journals. All right. Let's see if we go to more information and then we see if there's anything else that we can record. Remember, we have amounts that we had indicated that we're going to record them in the BRS. So what we're going to do now, we're going to record those amounts in the BRS. Let's go and record those amounts in the BRS. Okay, so here is our bank reconciliation statement. I'm just going to show you one way of doing it. That is the double column, the two column. I know some of you might do it the single column, but in this lesson, I'm just going to do the double column. All right, so I'm going to start off with my balance. So here at the top, I'm going to have my balance as per bank statement. So this is my balance as per bank statement. Therefore, it will end with my balance as per bank account. It will end off with balance as per bank account. Okay, what I want to record here, the first one, is this deposit. We are told that this deposit of 65,000, it is from Bentley Microloans. It did not relate to the business. So that simply means if they deposited money, they have credited our account. And if they have credited our account, to correct that, we debit our account. So we come here, then we'll say error on the statement. There's an error on the statement. The error that was on the statement is that they credited the account. If they credited the account, we correct it by debiting. So we're going to debit it by 65,000 here. And then the other error that we spoke about was the EFT transaction fees. If you still remember, the EFT transaction fees. And the EFT transaction fees were duplicated on the bank statement in error. Duplicated simply means they were recorded twice instead of only once. So if they were duplicated, that simply means they debited our account in error. Okay, the first one was correct, but the second one was an error. So the moment there is an error, which is a debit, we're going to correct it by, we're going to come here again, then we're going to say correction of error. We're going to say correction of error. Remember what they did? These are bank charges. So they debited us on the bank statement. To correct that, we are going to credit it. So we come here, then we say correction of error, 360 on the credit side. Okay, I'm going to see if we can move on from here now. All right, let's see if we can move on. Then we're going to move on to the next aspect, where they say cash journals reflected the following entries that did not appear on the April 2023 bank statement. So there are aspects that did not appear on the April 2023 bank statement. So once there are items that did not appear on the bank statement, we need to record those ones. Remember, if it is not on the bank statement, therefore we are going to record these in the BRS. Okay, let's see how we would have recorded these ones. Remember already on your BRS, we already had put a balance already. So remember, we had already a balance as per bank statement. And then we have a deposit here of 22,500. So we would come here, then we say credit outstanding deposits. Credit outstanding deposits. And the outstanding deposit is 22,500. 22,500. And then we have EFTs here. So with EFTs, we debit our outstanding EFTs. Okay, then we're going to write their numbers. That is 883. That is for 9,520. Then we have 884 for 12,530. So these are the outstanding EFTs. So we have now recorded our outstanding deposit as well as our outstanding EFT. All right, so we're going to move on now to the next one. What we are going to do now, we're going to totalize our journals. We're going to totalize our journals. So you're going to find here we already have a total on the journals. There is the total in the journal, and that is the CRJ, and here is the total in the CPJ. We are now going to take these totals onto our bank account. Remember, we'd already opened this bank account. So we're going to come here and we're going to say our CRJ, that is our total receipts. We'll bring it here. That is your 143,200. And your total payments will come here, which is your 237,000. We're going to close this off now as a ledger account. So we look for the side with the highest amount. You can see here we have 237. So here it's just going to be 237,000. So here it's going to be 237,000. So here it's going to be balance carried down. So it's 237 minus that, and you're going to have your 44,080. Can you confirm? Is that what you're having on your calculator? All right. I need you to have your calculator close because I'm going to be asking for figures from you. All right. So this therefore becomes my brought down here 44,080. Already you can see that in the bank account, this balance is on the credit side. The balance is on the credit side of the bank account, because the next part we're going to is the bank reconciliation statement. We're going to complete it now. So here we have a balance as per bank account, which is on the credit side, 44,080. Hence, when we come here, our balance as per bank account, you also find it on the credit side, which is 44,080. Remember, we had already recorded these ones. Are we together? So the balance as per bank statement, to get this one, that is what we were missing here. You would then say, you put your balance here, then you look again for the side with the highest amount. The side with the highest amount is going to be your debit side. So you say 9,520 plus 12,530 plus 65. It gives you 87. Then you have 87 on both sides. Then you now say the 87,050 minus the 44,080 minus 360 minus 22,500. That's how you get your balance as per bank statement, which is 20,110. All right, that is how you would have done it. The alternative is the single column one, which you see over here. But I said because of time, I am not going to touch much of this. I'm going to stick to the double column. Remember, in the exam, I've seen most guys who end up putting brackets in this double column. Please, if you are doing the double column, no brackets. You only use brackets if you are doing the single column, which is the alternative there. All right, if we're good, I'm going to move on to the next aspect. All right, if you're ready, let's move on to the next aspect of today's class. We are now going to do the next question, which is the creditors reconciliation. The creditors reconciliation. I want to encourage you guys that you also look into the debtors reconciliation. Please look into your debtors recon. In this class, we will not touch the debtors recon, but as you're preparing for the exam, please also look into the debtors recon as well as the debtors age analysis. That is very important. Please remember to touch the debtors age analysis. Okay, let's move on as we do the creditors reconciliation. Kaya Stores. Kaya Stores is owned by Peter Sitole. The business buys goods on credit for PN suppliers. The business received a statement of account for February 2021. All right, and then required. Refer to information A, B, and C. Use the table provided. Indicate the changes to the creditors ledger account in the books of Kaya Stores and the statement received from PN suppliers. Take into account the errors and omissions, and then indicate a plus or a minus for each amount. Are you guys ready? Okay, if you're ready, let's go. All right, so here is the information. Very important that when you look at the creditors ledger, you get to understand that on the debit side of your creditors ledger, you are going to have a minus here. On the debit side of your creditors ledger, it is a minus. But on the credit side of the creditors ledger, it is a plus. All right. Hence, you find your invoices here. Are we still together? And then your debit notes, your EFTs, your discount, and your invoices are all there. Let's go on to the next aspect. The next one is the statement then. Statement. On the statement, on the debit side, it is a plus now. You see the difference. In the ledger, on the debit, it was a minus. But in the statement, on the debit, it is a plus. And on the credit, it is a minus. And then your invoices. But you see here, we already have a credit note, which is over here. So there should be something wrong with that credit note because it must be on the credit side. This is your ledger and the statement. Let's go and see if we have errors and omissions. So these are our errors and omissions. We're going to do them one by one. So please make sure you have somewhere to write. If you're ready, we're about to begin. Okay, give me a sign that you guys are ready. If you're ready, then we're going to go. Okay, thank you. Let's begin. We're going to start off with error number one. Error number one, if you're ready. Error number one. It says, invoice 353, all right, on the 5th of February was correct according to the statement. So this is the statement. See, here is the statement. And on the statement, it is done by PN Suppliers. All right. Remember, PN Suppliers is them. And then the creditors ledger, Kaya is us. So every time we look at this, we must remember there is them and there is us. Are we good? All right. So we are told that invoice 353, this is invoice 353. Can you see it? Okay, let's go. Invoice 353 on the 5th of February was correct according to the statement. So according to the statement is 10,800 and we're told that that is the right amount. So which one is the wrong amount then? Obviously, it is the one in the ledger. The one in the ledger is the incorrect amount. So in the ledger, we have 18,800, which is incorrect as compared to the correct one on the statement, which is 10,800. If we get the difference between the two, the difference is how much? Can I see your calculators? All right. How much is the difference? 8,000. Thank you. So the difference is 8,000. Who must make this correction? In other words, where can we go and correct this? Is it in the ledger or on the statement? Remember, we are told the amount on the statement is correct. That means we have nothing to correct on the statement. And the amount in the ledger is more. You can see here, it is more. So we come and correct it in the ledger. On the ledger, it was 8,000 more because we recorded 18,000 instead of 10,000. So we come to the ledger and we now say minus. Minus how much? Minus 8,000. So we come here, then we say minus 8,000. Why? Because the amount in the ledger is more. So we come and then we say minus 8,000. Okay, if we're ready, we're going to move on to the next one. Here's the next one. Error number two. Error number two reads, PN Suppliers, that is them. Remember, that is them. PN Suppliers, so they made an error in recording the goods returned on the 7th of February. Remember, we spoke about this one. Here is the goods returned on the 7th. What did we say? We agreed that on the debit is a plus, on the credit is a minus. So they're telling us that they made an error in recording the goods returned on the 7th. What error is that? They recorded returns on the debit side, yet returns must be on the credit side. Remember, returns decrease, returns don't increase. So how do we correct that then? The moment an amount is recorded on the wrong side, we correct it by recording it on the correct side, but double the amount, twice the amount. What this means is we're going to come to the statement. And remember, it is your 600. So we're going to have our 600 times 2. That is your 600 times 2. That is your 1,200. So someone would have come and say, remember, this was a credit note. It was supposed to be subtracted. So someone would come and say minus 600, minus 600. Very correct. Someone would have simply come and say minus. Someone would have said minus 1,200. That is what another person would have done. You are both correct. You're both correct. Remember, if an amount is recorded on the wrong side, you correct it by putting it on the right side, but twice the amount. Let's move on to the next one. The next one then reads, Kaya Stores, this is us. Kaya Stores, this is us. So we entered a discount with the EFT payment on the 13th of February. Okay, here's the discount. PN Suppliers, that is they informed us that they do not qualify, that we do not qualify rather, for this discount. Okay, so we recorded a discount that we do not qualify for. What do we do in this case? So we come to our ledger. When we record a discount, we need to understand what effect does it have. When we're in the ledger, on the credit side it's a plus, on the debit side it's a minus. So when we recorded a discount, it decreased our account. Yet that discount was not granted. To correct that, we're going to come into our ledger, then we're going to cancel that transaction. So we're going to come and say plus 1,140 because that discount was not granted. We had said minus 1,140. To correct that, we simply come and say plus 1,140. Okay, I'm going to move on to the next one. The next one is going to be your error number 4, and it reads, invoice A417 in the creditors ledger account of PN Suppliers, okay, was for goods purchased from LM Suppliers. Okay, so invoice in the creditors ledger, so this is in the ledger done by us. We recorded invoice A417, which is this one here. Remember, it's for 6,100. That invoice was actually for goods purchased from LM Suppliers. LM Suppliers is a different supplier from PN Suppliers. So we recorded an amount for a different supplier in this supplier's books. So it is an amount that must be taken out. Remember, it's an invoice. An invoice was added. So to take it out, you minus it. So you come here, you say minus 6,100 because it was an invoice. So we subtract it. All right. Remember, it could have been something different. So you have to understand what was done first before you can correct it. Let me move on to the next one. The next one is error number 5, and it reads, the trade discount on invoice 390 was not deducted by PN Suppliers. All right, so you will realize that on invoice 390, according to the statement, the amount must be 12,980. But according to us, in the ledger, according to us, the amount must be 11,800. The trade discount on invoice 390 was not deducted by PN Suppliers. So they did not deduct this trade discount. How much was it? We take the difference between the 12,980 and the 11,800. And the difference here will give you 1,180. Okay, so when we come here, then we're going to record this in the statement, because remember, it is them that made this error. So we're going to come to the statement, and then we're going to say, remember, it is discount that they have not recorded, trade discount, so we minus it, minus 1,180. I've seen a place where they indicated that it was a VAT amount that was not recorded. A VAT amount that was not recorded. I also want to bring to attention that when you are preparing, remember to do VAT. I once saw a question where they said one of them had not recorded VAT. So I wanted to relate it with what we see here. In this case, it is a trade discount that was not deducted. It can be VAT that was not recorded. So please remember to practice along these lines as well. If the VAT was not recorded, then you see how it should have been recorded. Okay, I'm going to continue. And then the next one is number 6. It says, the bookkeeper transferred a debit balance from the debtors ledger account of PN Suppliers, general voucher 221, to their account in the creditors ledger. Okay, so what this simply means is we need to do as what we've done in the ledger. Whatever we've done in the ledger, we now need to do it in the statement as well. Remember, in the ledger on the credit, it is a plus. On the debit, it's a minus. So we came into the ledger and we subtracted 2,660. That should have been done also in the statement. So we come now to the statement of account, and then we're going to say minus 2,660. All right, because here it was subtracted, so we'll do the same. We also would subtract it here. I do not want to open the ledger accounts and explain all those principles. Whatever we did in the ledger must be done as well in the statement, especially when we transfer a debit balance from the debtors ledger account. Okay, I'm going to move on to the next one. The next one reads as follows. The statement shows entries up to the 24th of February 2021. All right, so if the statement shows entries up to the 24th, this is what was after the 24th, which is an invoice on the 27th. So we're going to come here, and once it's an invoice, remember it's on the credit side, which is a plus. So we're going to come here, then we're going to say plus 7,700, because it is an invoice, and an invoice is added. Hence, we added that one there. Okay, so to sum up, this is what we end up with eventually. This is the balance of your statement of account, and then this is the balance of the ledger. I want to encourage you, even if you feel you made a mistake somewhere, continue to give these totals in. All right, whatever amount that would have found either on the statement or on the ledger, make sure that you put the same totals on both the ledger and the statement. Do not leave these spaces blank. Do not leave them blank. All right, so we're going to take a 2-minute break, exactly 2 minutes. We're going to take a 2-minute break, and then we are going to come back, and then we're going to start with cost accounting. Exactly 2 minutes. Just grab a bit of water, and then I'm going to see you in 2 minutes time. Welcome back, dear guys. I hope you guys are still there. What we did earlier on, we did the BRS and we also did the creditors reconciliation. However, I reminded you of the debtors reconciliation. I also reminded you of VAT. All right. So these are topics that I need to remind you of. The debtors recon, I'm not going to do it today. Neither will I do the debtors age analysis. All right. And then I'll also not do VAT. But please be reminded of these. One very important aspect is I've just shown you calculations of the bank reconciliation. But remember the internal controls as well. And your internal controls on your creditors. your internal control on your debtors. That is of great importance. Even internal control on VAT. Remember, internal control is part of the examination. So we mustn't only prepare for calculations. You need to prepare for your internal controls and different scenarios that can be brought by the examiner. Now, what we're going to do, we're going to come to the June 2023 paper. If you're ready, now in this activity, I would want you to punch in figures and then you give me amounts. I want to do this one together with you. I'm going to try and interact with you so that we can move together. Okay, if you are ready, please give me a thumbs up. Okay, thank you. Let's go. There it is. The activity reads, Ladoo manufacturers. The business manufactures leather purses. The financial year ended on 28 February 2023. Required. Refer to information C. Calculate the factory overhead cost and prepare the production cost statement. Okay, so there are several things that an examiner would ask whenever we come to cost accounting. So one of them is the factory overhead cost and then the production cost statement. I also need to remind you of what is known as the abridged income statement. You remember the abridged income statement. Okay, in the notes, the final revision notes that we've received, I think you would find some of these aspects highlighted in there. So remember your abridged income statement. Of great importance is your break-even calculations and commenting. Break-even calculations and commenting. So I just want to remind you of certain things before I get into the calculations here. Internal control for cost accounting is of great importance. You would see that in the past exam papers, examiners would bring questions on the control of labor, direct labor, the control of raw materials, whether raw materials were stolen or they were wasted. This is of great importance. As you are preparing for the paper, please look into these aspects as well. The control of direct labor, the control of direct materials, whether it was wasted or it was stolen. These are certain aspects that I need to bring to your attention. But of great importance, break-even calculation and commenting. All right, before I go on, please be reminded, internal control, very, very important. All right, so let's start with our factory overhead calculations. All right, so what we're given, I'm going to take the information as it came in the exam paper. So the first part we were given, that is information A, work in progress stock. We have work in progress stock of 542,000. So once you have work in progress stock, that is on the 1st of March. Remember, this is at the beginning. You need to know your production cost statement format. Then you would know that once you have work in progress at the beginning, it will come here. There it is, work in progress at the beginning. All right, so I'm going to move step by step. We've touched information A. We now want to see what was in information B. All right, it spoke about our direct labor cost, All right, so it said we have 40 employees, that is the number of workers, 40. Then there's the basic or the normal wage rate of 60 Rand per hour. And then the overtime hours worked by each were 1,920. Then the overtime in total is 1,142,000. Okay. So what we are doing here, remember, we are preparing the production cost statement. In the production cost statement, the first two direct costs are your direct labor. So here you have your direct labor cost as well as your direct material cost. Okay. I have seen that the examiner can test you to calculate either the direct labor or the direct material or both. It is very possible. In this question paper, we're asked to calculate the direct labor cost. And then the direct material cost will then become the balancing figure, considering that we're given the prime cost over here. So let's come and calculate. We will now say the number of employees is 40. So we say the 40. Then we multiply this by the normal wage rate, which is 60 Rand per hour. So it's going to be 40 multiplied by 60. I need calculators now. I told you I'm going to be asking for figures. Okay, punch in. If you say 40 multiplied by 60, how much do you get? Thank you. You get your 2,400. Okay, let's go. So once you get the 2,400, that is what we are paying over there. But we understand that the normal time hours that we worked were 1,920. So I'm going to come here, then I multiply this by 1,920. I want to know now how much is my direct labor cost. Then you will see on your calculator how much do you have. 4,608,000. 4,608,000. Thank you. So I'm going to come here now and I'm going to say on my direct labor cost, I'm going to have my 4,608,000. All right. But I also have overtime here. So I'll come here and I'll add my overtime, which is 1,142,000. Then I add my overtime. The examiner at times can bring you contributions. Once you see your employer's contributions, you come and you add them here as well. If the examiner brings you contributions, all right? So if you see contributions, you come and you bring them here. If the adjustment is broken down where you have net salaries and you have your deductions, remember we need the basic. We need the gross. That is what we record here. Whatever the adjustment comes as, we calculate back to the gross. Once you get the gross, remember the contributions. All right, so let's add these ones. It is your 4,608,000 plus 1,142,000. How much you end up with? Say it again. 5,750,000. 5,750,000. That becomes your direct labor cost. So you understand how to get prime cost, do you? How do we get prime cost? It is your direct labor cost plus your direct material cost. Those two make up what we call prime cost. That means we're going to come here now. We want to get prime cost. So I would say my 12.5 million minus what I have here, which is the 5,750,000. And then I'll end up here with 6 million. Say it again. 6,750,000. Such that if I add these two, they should give me my prime cost. Very, very important. So before I move on, I want to remind you, the examiner can test you to calculate direct material cost, where you are given the number of units produced and the cost per unit, and then you do all those calculations. Or you can do the direct labor cost, and remember to add your contributions, and then the examiner can test you on both. It's very possible. All right. So once you get that, you get your prime cost. The next part that is going to come, you're now going to come and say add factory overheads. Remember, factory overheads are added plus factory overheads plus factory overheads. All right. So let's see if we can get some factory overheads. The next information says the bookkeeper calculated the factory overhead cost as 2,638,600. I think we've seen so far that we get to be given an amount and then there are errors and there are omissions, all right, that we need to consider. Let's see what is happening here. The following costs were omitted. Okay, very important. Remember, there's a difference between an omission and an error. If the amount is omitted, it was not recorded at all, so you must record it. But if the amount was recorded erroneously, therefore you need to correct the error. In this activity, we have both transactions where an amount is omitted and where an amount is recorded in error. So I'm going to show you how to do the ones that are omitted and the ones that are incorrect so that we can correct them. The examiner can test you on either an omission or an amount that is erroneously recorded. All right, let's see what we are given here. Insurance is a fixed monthly premium for the entire financial year. The amount paid of 235,950 includes the premium for March. So what the examiner is telling us is that within this 235,000, within the 235,950, this is for March as well. Remember, the financial year is ending in February. So we count February, then March. That makes it how many months? 13. So this is for 13 months. That tells us that per month, how much was the insurance premium? Calculators, please. How much you get? Thank you. 18,000. 18,000, say it again, 150. Thank you. 18,150. All right. 2/3 of this expense relates to the factory. So what we know is that when I come here and I'm going to record here now, remember, I'm going to record what? My insurance. So I'm going to come here, then I'm going to say insurance. In insurance, I have how much? 235,950. But this is for 13 months. I need to remain with only 12 months. So I come and I subtract 18,150. All right. So if I say my 235,950 minus 18,150, how much do I remain with? I remain with 200 and, say it again, 217,800. So I get to 17,800. Once I get my 217,800, then I can come and say this must be split because 2/3 of this expense relates to the factory. So I'm going to come and say 217,800, multiply that by 2/3 because 2/3 relates to the factory. All right, how much do you get? You get 145,200. This is what we are going to add. Remember, in the factory overhead, we are adding, especially if the amount was omitted. All right. So this is the insurance. Let's see if we can do the next one. There were several ways of doing this adjustment again, but remember, I'm trying to do it in the slowest and the easiest way possible. The next one. Remember, we're still on amounts that were omitted. We're told water and electricity allocated to the office was 69,200. This is what was allocated to the office. Very important. You will lose marks if you don't read this sentence properly. Water and electricity allocated to the office. So they are talking about this one here, which is your 160 square meters. Note that water and electricity is shared according to the floor space as follows. So the first thing we need to know is how much is our entire floor space, our entire floor area. So we're going to say 560 plus 240 plus 160. That is going to give me 960 square meters. 960 square. This is the entire property. The entire property. Okay. Now, what I know is that when I am recording in my factory overhead, I need the amount that relates to the factory. That is what I know. But I am given the water and electricity. I'm given the water and electricity that relates to the office. Okay. So I'm going to come in and I'm going to say water and electricity. I have my 69,200. But what I need is what goes to the factory. And I know that this 69,200 is equal to 160 square meters. You remember the what you want and the what you have. Because once you have two values, in other words, the 69.2 is equal to 160 square meters. And what do we want? We want the 560 square meters. So we can get it. So we now say, what is it that we want? We want 560 square meters. What do we have? We have the 160. So it's going to be 560 over 160. All right. Calculators, please. How much do we get? 242,200. That becomes the water and electricity. Okay, I'm going to move on. The key aspect was for you to know that the amount that was recorded was for the office. Okay, we're going to move on to the next one. The next one then reads, the following must be corrected. This is different now. This is different because earlier on, these were amounts that were omitted. But in this one, we have to do correction. In other words, we're dealing with an error now. Let's hear. Rent of 316,000 was recorded in the factory overhead cost. In other words, it's in here. The rent of 316,000. However, the bookkeeper used the incorrect ratio of 2:5:1 for factory, sales, and office. The ratio is 3:2:1 respectively. There's several ways in which one would have done this. Several ways in which one would have done this. The other way was to remove the error, then you record the entire correct amount. All right, but first let's do a bit of calculations, then we come to all those processes. What we know is that we have rent of 316,000, but this rent is after this ratio has been used. All right, and once you hear the word respectively, it simply means the first one relates to the first one. So this is the factory, the sales, and the office. And if we say 2 plus 5 plus 1, that gives us how much? That gives us 8. So we want to know how much was the amount before it was allocated. Okay? So we know that the amount that has been given is the 2. The 2 is equal to 316,000. What we want is the entire amount, the 8. So if that's the case, we can then say what we want. Remember, what we want always goes on top. We want 8. What we have is 2. The 2. Because the have must have 2 values. 8 over 2 multiplied by 316,000. And then, let's punch that in the calculator. How much you get? 1,264,000. This was the entire rent amount before it was allocated. So now we have the amount before it's shared. Let's share it properly then. So we're going to share the 1,264,000. How do we allocate it? 5 is to 2 is to 1. If we add these ones again, they give us 8. So we're going to say, multiply, what do we want? We understand this 1,264,000 is equal to 8. Very important. Equal to 8. What we want, what do we want? We want 5 in this case. 5 over what we have, which is 8. So it's going to be 5 over 8. Calculators, please. Calculators. You get your 790,000. Okay. So the situation that we have here is we have an amount of rent in this amount, in the 2,638,600. And the amount for rent that is in there is 316,000. Yet we should have recorded 790. I'm going to say it again. We have recorded 316 when we should have recorded 790. Let's just record the difference. So we say 790 minus what we have already recorded, which is the 316. The difference therefore becomes how much? 474,000. So we're going to come here. Then on the rent, we're going to add 474,000. Okay, 474,000. That is what we would have done. Someone is saying, but the other way, Mr. Simbi, is you take out the difference, take out the incorrect amount, then you add the entire correct amount. That is very correct again. What you are saying is the other way of you having done this was to come and say on this 2 million, on this 2,638,600, you would have subtracted the 316,000 and then you would have added the 790,000. It's still the same thing because once you solve this, you come back again to 474,000. Are we good? All right. So we're going to move on to the next aspect. All right. Which is information E. Total production for the year is 33,500 units were produced at a cost of 475. All right. So here we want to get the cost of production of finished goods at the bottom here. The examiner, if he is testing this area, at times, he can give you the number of units and he can also give you the cost per unit. Or you can be given finished goods stock. Finished goods stock. All right. So please remember to practice this area as well, where you are given finished goods at the beginning, finished goods at the end of the year, and then you're also told the goods that were sold. That is your cost of sales. So that will help you again to do this one. Normally you do a finished goods stock account, a ledger account. All right. So that's another option that the examiner can bring you this calculation of the cost of production of finished goods. But in this case, we are given the units and the cost per unit. So we'll come at the bottom here and then we would say your 33,500 and then you would multiply it by 475, and then it would give you your 15 million. All right, remember we're saying that multiply by that, it gives you 15,912,500. This is what you get. All right, this is what you will get. Now let's complete our production cost statement then. All right, so remember we have done this one and then we got the 3.5. So remember here with our direct material and with our direct labor, we have the prime cost. We come and then we add our fixed overhead, which is 3.5. Then we end up with 16 million, which is our total manufacturing cost. Remember, terms are very important. Total manufacturing cost, 16 million. Then you come to work in process at the beginning. Remember, this was given. So you're saying 16 million plus your work in process at the beginning plus work in process at the beginning. It will give you your 16,542,000. And then, so you have this amount and you have this amount. The difference between the two will then give you your work in process at the end. So this was the balancing figure. You simply say your 16 million minus your 15 million down there. Then you are done. All right. So once again, I want to remind you of your break-even calculations and commenting. Break-even calculations and commenting. Internal controls. Remember, control direct labor, control direct material cost. Very, very important. All right. Ensure that you do these ones as you prepare. Okay, I'm going to move on to the next question, which is a different question. So I'm going to move on now to budgeting. We're going to look again at the June 2023 paper. All right. So the first part is to complete the debtors collection schedule for July 2023. And we are looking at 7 marks. I've seen again where if you're not required to do the debtors collection schedule, you may be required to do the creditors payments schedule. Please take that into consideration as you are preparing. You are either tested on the debtors or the creditors. Please make sure you prepare for both your debtors collection schedule and the creditors payments schedule. All right, so this is the information that we're given, and then we're quickly going to complete our debtors collection schedule. Date is there. I've seen again questions whereby this amount will not be given, okay, or that amount will not be given. Then you have to calculate coming back. Please remember those calculations where you have to calculate to get your credit sales from your debtors collection schedule information, as well as a debtors collection schedule which also has bad debts. I want to highlight you again to the last revision material which was sent recently. There is calculations to this effect where you calculate bad debts. All right, so we're going to complete this debtors collection schedule. The quickest way would be that you understand what the examiner is saying. Credit sales comprise of 70% of total sales. Debtors pay according to the following trend. 20% pay in the month of sale and receive a 7.5% discount. 55% pay in the month following. Okay, so you would have read this even in your 10 minutes reading time. So you already understand that the balance is written off thereafter. You can see here, if you say 20 plus that, you subtract it from 100, the balance becomes 3%. That's your bad debts. The examiner can test you on some of these things to calculate the amount of bad debts to be written. Please take note of that. All right. So in this activity, I'm focusing on the cash budget, but also please prepare some calculations that you would also find on your projected income statement. Very, very important. And before I continue, remember the difference between your cash budget and the projected income statement. I've seen questions whereby you are tested on what are the similarities or amounts that can be recorded in both cash budget and projected income statement. Others would say which items would not be recorded in a cash budget but in a projected income statement. Those are your good mark questions. Please prepare on those questions as well. Okay, let's continue here then. 20% pay in the month of sale. So I know my month of sale. That simply means if I sell in July, I will collect in July. So that is the first month. So I'll call it 1. First month, that is 1. In the second month, that is 2. So I'm gonna number my going up. So it's gonna be 2 up there. 2 months after, so here it's gonna be 3, and that will be 3 there. So that simply means when I come here, I'm going to say 931,000. So I'm going to come here and say 931,000. Then I'm going to multiply it by 20 over 100. Multiplied, I say 100 minus 7.5. That's going to give me 92.5. Multiply by 92.5 over 100. If I punch that in my calculator, how much do you get? If you say 931 plus 20 plus that one, you should get 172,235. So I'll come here, get 172,235. Okay, I'm going to move on. The next one then is June. When I come to June, in June, I'm going to look at number 2, which is 55%. So I'm now going to say 921,200 multiplied by 55 over 100. How much you get for that? You get 506,660. Okay, I'm going to move on to the next one, which is number 3, where you have 891,800. Then you multiply that by 3, which is 22%. Multiply by 22 over 100. And that should give you 196,196. Remember to add all of these figures. That should give you 875,091. In other questions, you will be required to take this amount to your cash budget. Please be able to do that if the amounts are to be taken to the cash budget. Once more, please remember to prepare for the creditors payment schedule. It is of great importance that you prepare that one as well. The next part of the question says, calculate the missing figures 1 to 3 on the cash budget. Calculate the missing figures. So the first figure that we're calculating here is our cash sales. Okay, so this is going to be easy because when we're calculating our cash sales, we are told here is our sales. And this is for the month of July, so we come into July. Credit sales comprise 70%. Remember, total sales is 100%. All right, and then credit sales. Credit is 70. That means cash is 30. All right, let's go. So what we are given is total. So we are given the 100. What do we want? Calculate the cash sales. We want 30. We have 100. Multiply this by 1,330,000. And this would give us how much? 399,000. 399,000. This becomes number 1. 399,000. That becomes your number 1. Can I move on? Okay, let's go to number 2. Let's go into number 2. Number 2 then says, loan. Okay, we've seen these type of questions several times. The business plans to take a loan on 30 June 2023. This has been negotiated with the bank at 11% per annum. Interest payable at the end of each month and commencing on the 31st of July 2023. Okay, so we have a loan that we have taken. We don't know the amount, but that loan that we have taken, if we say multiply by 11 over 100, multiply by 1 month over 12, that is giving us this amount, the 5,500. This is what we're being told. So the simplest way to go about this is to come and say this 5,500, you multiply by 12. All right. And then you will get how much? You get your 66,000. You get 66,000. Then you say that 66,000 divided by this one. 11 divided by 100, that is 0.11. So you say 66,000 divided by 0.11. And then how much do you get in your calculator? You get 600,000. That becomes the loan here. 600,000. Very important. So at times they can ask you how much of the loan was repaid. You should be able to do that, whereby you see the difference in the interest on loan, where you are given a different amount of interest on loan. Okay? Can I say that again? This kind of adjustment can come with the loan, whereby you have a difference in the loan. Let's say here it's 4.5 and here it's 5.5. The difference in the loan, you can see that the loan is increasing. The interest in loan is increasing. That means we received a loan. The examiner can ask you as well that kind of a question. Here is an increase. There can be a decrease as well. You should be able to know that one as well. The fixed deposit can also be tested in this way. The fixed deposit, the very same way, as well as the purchase of fixed assets. All right, the purchase of fixed assets. Please prepare accordingly. All right, the purchase of fixed assets can also be tested, especially when you look at your calculations that have to do with fixed assets that were purchased. I'm going to move on to the next aspect. The next one says calculate the missing amounts. Remember, we are now on 3, that is payments to creditors. We are told stock is replaced in the month of sale. A base stock is maintained. What this means is whatever we have sold is what we buy. 80% of stock is purchased on credit, and creditors are paid 2 months after the month of purchase. So whatever we sell is what we buy. And then when we have bought it, we will pay 2 months after. So if we are in July and we want to pay, we have to count 2 months going back. So we are in July. We'll count 2 months going back. This is going to be 1 and this is 2. The second month going back is May. What was the cost of sales in May? 910,000. So you come here, then you say 910,000 is the cost of sales in May. You multiply that by your 80%, because we're told stock is maintained. 80% of stock is purchased on credit. Okay, so whatever we have purchased on credit, we paid 2 months after. And then that gives you 728,000. So we purchased it in May, but we'll pay for it in July, 2 months after. But to know it, go to July, you count 2 months going back. All right, let's quickly go on to the next one. Calculate the percentage increase that workers will receive in July. So these are very, very common questions. Percentage increase, percentage decrease. And remember to comment as well, especially if it has to do with salaries, if it has to do with particular expenses. There are control questions that also might follow such calculations. Calculate the percentage increase that workers will receive in July. Okay, so for you to do that, you first have to look at what they were getting before. So this is before increase and this is after increase. So after increase, these guys are getting 182,320. But before increase, it was 172,000. That means the difference is going to be 10,320. Then we now say that difference, we divide it by what it was before it increased, which is 172,000. You multiply that by 100 over 1. I'm going to say it again. You take the difference, you divide it by the original amount or the initial amount, okay, or the amount before increase. Then you multiply by 100 over 1. How much are you getting? 6%. Thank you so much. And then remember, there will be follow-up questions that need to be answered. So remember, once you are answering such questions, you also need to know what is happening. Much of these questions have to do with salaries. Okay, so remember to answer these kind of questions. I'm going to move on to the next one, to the next part. Okay, I'm going to move on to the next one. So here, remember, we were calculating the percentage increase that the employees would receive. Okay, I'm going to move on to the next aspect here. The next one is going to come from the NSC June 2023 again, but now I'm on inventory valuation. Okay, but before I go on to inventory valuation, it is very important that I remind you of the aspect in budgets where you are given expenses, the budgeted and the actuals. You should be able to comment. Please prepare on those kind of questions properly. Your advertising, your maintenance, you have all those material and you've done those questions. I am just here to remind you that before you go sit, just refreshing yourself with those kinds of questions. Okay, inventory valuation. Right. On inventory valuation, we have already seen in our paper one that we're tested on the FIFO. So we're not going to waste time looking at the FIFO. We're going to look at the two other methods, that is your weighted average and your specific identification method. So we're only going to look at two methods, your weighted average and your specific identification, because your FIFO was already tested a week ago. Durban branch. This branch sells specific and Caspian TV sets. So we just streamlined this particular question to the Pacific TVs. Mandy was concerned about the following issues, all right? And then I'm not going to read much of this. I'm going to quickly go on to the calculation. Refer to information A and B. Calculate the value of closing stock of the Pacific TV sets using the specific identification method. I want to remind you of the specific identification method. Okay, so this is the information that we are given. And then when you come here, you would see that when you are calculating your value of closing stock, one of the common things that you'd find is your cost price, that your cost price is the same. So once your cost price here is the same, it makes it easy for the question, for you to answer the question, all right? Because you don't have to struggle. But there are questions at times where they have different brands. I think you've seen one where they have different types of cell phones. They have an A20, an A15, an A1. So you have to deal with them as per brand, or different cars. So you have to do as per the different car brands, all right? So please look again into those kinds of questions. This one was a bit different because with this one, it was easy. You would simply come and say, how many units are available for sale? How do you know that? You say your units at the beginning, which is your 350, plus your purchases. So 350 plus 800, that will give you 1,150 units available for sale. Units available for sale. And then you would now say, how many were sold? Here we sold 765. And we sold 765. How many then were left on hand? We were left with 385. So if we're left with 385 and we know that each one cost 9,300, so we then say 9,300 multiplied by 385, and then this would then give us how much? Let's put that in rands. 3,580,500. 3,580,500. This one was a bit easy. Please look into your material and into your past papers. You should find some of these questions whereby there are different brands but of the same type. It could be laptops, but then there are 2 or 3 different kinds of laptops. Please prepare accordingly as well. Okay, I'm going to move on to the next aspect. Once I'm done here, I'm going to look now at the NSC November 2021 as I am preparing to wrap up now. I'm going to do inventory valuation in this paper, and I'm going to focus on the weighted average method. Okay, I'm going to focus on the weighted average method. Okay, and then we are told that is the information. We're going to use this information to prepare to calculate the value of closing stock using the weighted average method. Okay, So what we're going to do is, number one, we're going to calculate the value of closing stock. All right. So this is the question that we're looking at. It's going to begin here. That is our activity. The previous one was a different one, but this one is the one that we're focusing on. It looks at the value of closing stock here using the weighted average method. This is the question that we're going to focus on. Okay. And then we're also going to look at the stock turnover rate. Okay, let's begin. So here's the information that we were given. It says, the following information relates to the running shoes. And here are the balances. That is your information A. Then you have your purchases, your carriage, returns, and sales. Very, very important. Okay, let's start the calculations. When you are doing your weighted average, it is very important that you understand that at the top you have your rand, others call it the value or the rands. So that is your rand. At the bottom you have your units or your number of units. So we're going to now say the opening stock, which is 101,090. So I'm going to come here. It's going to be 101,000. Here it's 101 and 90. And the units is 206. Then we say plus. Your 2,236,700 plus your 2,236,700. And the number of units is 2,490. So I'm going to say plus 2,490. Okay, so here I have my opening stock, I have my purchases as well. Then I'm told carriage on purchases is at 25 rands per unit. So I'm going to come here and I'm going to say plus. Then I'm going to open my bracket here. It's 25 rands per unit. And how many units did we purchase in total? 2,490. Multiply by 2,490. Okay, and then that's going to give you 62,250. Then I'm going to come to the last one, which is my returns. We're told 60 pairs of shoes were returned. So I'm going to come and say minus 60. I come to the top, and then I say minus. I open the bracket again. It's 60 multiplied. These were from the September purchases. So I come to September. In September, each unit had a cost price of 900. So it's going to be 60 multiplied by 900. And then that gives me 54,000. Okay, so I'm going to now come and say 101 plus that, minus that. And then that is going to give me my 2,346,050. And then I divide this by this plus that minus the 60. Remember, it's 60 minus the 60. And then that's going to give me 2,636. This will give me an average price of 890. So remember, it's the weighted average. So my average price is 890. Then I'm going to come and say my 890, I multiply it by the number of units at the end, which is my 420. 890 multiplied by the 420. That's going to give me 373,800. Very, very important. That gives you now your value of closing stock. Questions that the examiner can ask you following up to this is to calculate your cost of sales. To calculate your cost of sales, I've seen questions whereby the examiner would want you to calculate your gross profit. Where you calculate your gross profit, that is, you are now saying your sales minus your cost of sales to get your gross profit. I've even seen a question where they're asked to calculate the markup percentage. That is, if it is not given. So these are questions that you should prepare for. But once again, when you're looking at inventory valuation, you should also be able to look at missing stock. All right? Are you able to calculate your missing stock? All right? You should be able to do that. Please go back to your practice questions. there should be calculations where you calculate your missing stock, how many units are missing, and remember to do the internal controls as well once there is the missing stock. And then, as we have now come to the end of the class, we are just going to do the last calculation, which is the stock turnover rate. And I'm not going to lengthen it. I'm just going to show you the quickest way. I'm going to use units. I'm going to use units to calculate your stock turnover rate. All right. So there are other indicators that could have been calculated. Your stock holding period. All right. Remember all those indicators as we are preparing. All right. So for my stock turnover rate, I'm now going to say, remember the formula. It is your cost of sales over average stock. All right. So I'm going to need my cost of sales. That has to do with the number of units sold. Cost of sales, the number of units sold. So I'm going to take my number of units sold, which is my 2,216. Then I divide it by my average stock. How do I get average stock? I'm going to say my opening inventory, which is 206, plus my closing inventory, which is 420. I add this, I multiply by half, some divide by 2. All right. And then this will give me my answer. Remember to show it in times because it is the stock turnover rate. If it was the stock holding period, the examiner will tell you to calculate it either in days or in weeks, depending on what the examiner wants. All right. And at times in the question, the examiner will also say, use average stock or use the closing stock. So these are questions that you need to keep remembering. And here it becomes 7.1 times. So with your inventory valuation, there are several calculations that you may be demanded by the examiner to do, such as your stock turnover rate, your stock holding period. And then you then comment, is this good? Depending on the different kind of product. I know there's so much that would want to say, but time is no longer on our side. I have to say goodbye now because I know you guys need the time to go and tie up some loose ends. I know you have been studying and I know you're tired. It is further into the exams. You have been writing exams for a couple of days now, but I just want to encourage you. Just give it one last push, one last punch. This is what we've been preparing now. The entire 12 years, it comes down to this moment. You cannot begin to give up now. Giving up is not an option. You have worked, you have prepared, your teachers have supported you, and I know you are about to make us proud. Here is my last closing remarks. Please, tomorrow wake up early. Make sure you take some water with you. Make sure the pencils are sharp because your results don't only affect you. We are all looking forward to you making us proud. And tomorrow is that day where you are going to make us proud. If there's anything that I've left that you know you need to prepare on, please go and prepare on those things. From me, it is goodbye. Thank you for joining my class this entire year. And I hope you all the best for your future endeavors. And I know your future is bright because tomorrow you are going to make it. Thank you. It is goodbye.